Hi there. So we're going to talk about Chapter 1. And I'm sorry I can't be there. I'm at an accounting conference. But I will be back on Monday and we can talk about Chapter 2 and any questions you have left from Chapter 1. So what we're going to do today is go through the PowerPoint that is out here in Blackboard. So it's Chapter 1 PowerPoint. And I am just going to start going through it with you. Now, up till this point in your accounting career, you've been doing transactions, I guess I would say. You've been learning the rules for accounting. So if a company you're working for has a sale, you put that down as a credit. It's a revenue. You learn the rules for revenue. It's not until you've delivered the good or provided the service. Payment has to be likely. So you've been learning these rules. And you've been learning how to do the transaction in terms of debit or credit. You've been learning revenues go on the income statement. Assets, liabilities, owner's equity goes on the balance sheet. All these sort of rules and how to apply the rules to transactions. Well, that's awesome, and you definitely need to know that. But we're going to do information systems now. And when you really think about how a real organization does these transactions you've learned, yes, somebody has to understand the rules so they can set up the system, but let's think about HEB. Okay, so HEB doesn't just do 10 transactions. Some are revenue, some are purchases, some are payroll in a day, right? Like you learned in class. You practice all these different transactions and you journalized them and you posted them and you did 10. Maybe on a busy day you did 20 or something. So that's not how real life works. On a regular day, HEB is doing, I would guess, millions of dollars worth of transactions. Maybe even billions. So clearly, if you're going to handle billions of dollars worth of transactions, you need a system, right? So that's what this class is about. How, as an accountant, do I gather all that data and make it into something that makes sense in real life? So you need an accounting information system, whether it's a manual system, like we're going to do with the SUA, or whether it's a computerized system, like we're going to do with the Sage 50, or any other system that you use out there. You have to have some way of making sense of all those tons of transactions so you can turn them into financial statements that give actual information. So Chapter 1 is just sort of a nice overview of information systems. We'll talk about it real quickly and we'll move on to actually using information systems. Alright, so obviously in accounting, we're interested in providing information, right? That's what financial statements are. They're information about the organization. It's a financial position, what's happened in that organization. That information comes from data, right? So data is a little fact stored in the system. So you've heard that term database, right? So a database is just a bunch of facts all stored together. A date, a company address, some numbers, right? Some transactions that occurred. So that's data, right? Data can be gathered together to provide information, right? So here is what we would call information. It's an invoice. It picks this bit of data, right? This data, this data, this data, and turns it into something you can mail out to a customer and hopefully collect that revenue that right now is an account receivable. Alright, so the system has saved all this various data in different places within the system, and the system compiles it into useful information, in this case an invoice. Alright, so information is valuable when it provides benefits, of course. Now, what makes information useful and beneficial? Right? So why we need to think about this, what makes information useful, is because when we set up our systems, we need to make sure that when we put data in, the information we get out has these qualities. And in order to have these qualities, right, we're going to have to set up controls in the system, right? So we want our information to be relevant, reliable, complete, timely, understandable, verifiable, and accessible, right? So these are the qualities our information has to have when it comes out. Well, what does that mean? Well, that means it needs to apply to what relevant means. It needs to apply to what we're going to do. So if I am the credit manager, I need to know about about the balances on accounts, right? That's relevant to my decision. So as a credit manager, I need to be able to access that information that I need that's relevant for my job. And I don't need to access information that's irrelevant. You can't just give me everything and say, here, make a decision. So the information system has to be able to pick out what's relevant for certain users. It needs to be reliable, so that means it's free of bias. What you put in stays what it is. It's not altered in some way. Complete, doesn't omit things. Timely, provided in time to make the decision. It doesn't take forever to get that stuff. Understandable, so meaningful, right? So let's go look at this invoice, right? If you just printed out those numbers, it wouldn't mean anything. So you have to arrange it so that it's meaningful. Verifiable, so it's gonna give you the same thing time and time again. And accessible, available when needed, right? We all know what that means. When we've tried to use our internet and it's down, that's exactly what that means. So just like, as I said, think about when your internet is down, so you can't access the account information in your information system, right? There are risks. So to keep our information useful, we need to have all these qualities, and of course we'd set it up to have that, right? I mean, why would I set up my accounting information system to not have that? Well, you wouldn't. But there are risks to these, right? There are risks that come in all different forms, and we're going to learn about those risks. For example, complete does not omit important aspects of events or activities. So if you're in my audit class, you know that completeness is also a management assertion on the financial statements. Why would they not be complete? Well, think about it. If you're the manager of the company and you want to make the company look better, you might leave off some expenses. So things would be incomplete. Somebody might actually on purpose omit something. Or, I've worked out there in the real world, and sometimes something is just too much trouble to do. You're supposed to get this information from a customer so that the credit manager can make a good decision, but they don't have it. It's kind of, you want to make the sale, so you just don't get it. Right? So there are threats. There are risks that won't be complete. So information systems set up controls to make sure it gets complete. So if we have to have complete credit information to make a sale, we put controls in that system that don't allow a sale if it's not complete, right? So nobody can mess with it. So we're going to learn about the risks to these qualities of information, the risks, right? Information risk. And we're going to learn about controls that make sure that, our information is accessible, right? So nobody has accidentally shut off the internet because they kicked the cord out of the server. Right? The server is hardwired to the electricity or something. Right? So we're going to have risks, we're going to have controls, and we're going to learn to understand those. But you need to understand an information system is gathering all the data together. Like if you're HEB information systems person, you're responsible for gathering every single sale at HEB and making sure it gets posted as a revenue, and making sure none of it gets missed, and making sure there's no extra in there, and making sure that the system doesn't crash, right, and all that good stuff. So we're going to learn how these systems work and provide the information that's useful. Now, to make it easier to set up your information system, we do that by process, right? So when you think about our example, HEB. Well, clearly before HEB can make those sales, they have to get the inventory, right? So HEB's also, in addition to doing a lot of sales every day, HEB's doing a lot of purchases every day, right? And when you go to HEB and you buy that stuff, and and the information system records your sale, there's people everywhere, right? There's people putting stock on the shelves, there are managers, there's cashiers, there are all kinds of people in the warehouses that you never even see. So HEB has people, right? So HEB had to hire those people, had to pay those people. Well, that's all information, right? Tracking those people for their payroll, that's information. So there's a lot of stuff going on, and there's many transactions going on. So in order to make sure we're keeping our information timely, relevant, reliable, all those great qualities, we group our information into business processes, right? So when we think about a process, we're going to think about what's happening in this part of the system. So HEB, you might think about the purchasing process, right? So HEB has to get inventory, right? So there's vendors they have to buy the stuff from, right? There's a person at HEB who's making the decision about how to purchase it. Once they get that stuff purchased, it has to get there, right? And once it gets there, it has to get out to the proper store. So this purchasing process has a lot of elements to it that we need to keep track of. So there's people, there's machines, there's decisions that had to be made. Before HEB could decide to buy their hot sauce from Vanderwally Farms, they had to go out for bids, they had to figure out who had the tastiest hot sauce, all that stuff, right? So they need information to make the decisions, and we group that into business processes, right? So processes have stakeholders, right? We've already talked about that, employees, managers, external stakeholders, and all these people are going to want some of this information, or they're going to provide some of the information, right? So the AIS is capturing this flow of information by process, right? Here's a little example from your book. It is figure 1-1, if you want to look at your book and follow that. You have your information system, right? And you have the various parties involved in different processes and who those parties are, and all of it's coming and going through the information system, right? So if you are making sales, you have to purchase stuff from vendors, right? Which means I have to send purchase order to the vendor, they send the good, they send the invoice, and we send them a payment. When customers buy stuff and we make a sale, so purchasing is from vendors, sales are to customers. When we make a sale, well, the customer orders from us, we give them the goods, we send them an invoice, and they send us a payment. And all the way through all the different cycles. So you can see that there's going to be purchasing and sales, there's going to be investing, there's going to be payroll, there's going to be financial statements, there's going to be governmental interaction. So there's all these different separate cycles dealing with different parties. So your information system has to be set up to provide information, right? So when we make a sale to a customer, the customer is going to request something from us. Well, we needed to have information available about what we've got. Is it in stock? How much is the price on that? We have to have a shipping warehouse or a storefront or something in place to get those goods to the customers. We have to have our information system collect all the data about the sale and send an invoice. And when that check comes in to pay for it, or that electronic payment, however it comes in, the credit card, we have to be able to process that, right? And doing the accounting for all of these, right? Not just setting up an invoice and shipping it, but when we set up the invoice, we recognize that revenue. When that payment comes in, we accept that as cash and reduce that asset account receivable, right? So all of this involves accounting too. All right. So in this book, we're going to look at basic business processes. And we're going to think about the risks to information in each process. We're going to think about controls, and we're going to set up our information system. So here are the basic business processes, right? There's the revenue process. So we give some goods or we give some service and we get some cash, right? There's the expenditure. We get some goods, we get some service, and we give some cash. There's production. Maybe not every organization has this, but if you manufacture something, you give labor, you give raw materials, you get finished goods. In payroll, you give cash to get labor. In financing, you give cash and you get cash. So we have these 5 basic processes. So if you can imagine, I'm going to put this up here. This is figure 1-2 from your book. I don't know if you can see it. Hopefully you can. All right, 1-2, and if you look at it in your book, you'll see that these processes are commingled, right? They all give each other information. But if you think about it, if we're going to have employees who are working in the production cycle, we have to hire them and pay them, right? If we're going to have employees working and creating something, well, we have to purchase the raw materials for them to use, right? And every organization is going to have a set of business processes that they need to keep data for. So because some of this stuff all goes together, we do it all at the same time. So as you'll learn, once we get to the system understanding aid, when we do purchases, we're just going to book all our purchases separately in one, all our expenditures in one cash disbursements journal, right? Which is how it would really happen in real life. You'd have one person writing all the checks, and we'd keep them all in one spot, right? Same thing with sales. We'll just track all the sales together. We'll track them all in the same way, so that way we can, in Sage 50, when we start using Sage, you'll see that the screen for a sale comes up, you fill out the screen, it processes it. You do another sale, the screen comes in, you process it, right? So it's the same thing over and over again, and we are able to set up controls for risks, right? We're able to set up controls for risks. So if there's a risk that an expenditure won't get in the system because we're trying to hide some expenses, well, there'll be controls in place that don't let checks get cut without certain things happening, and the system will stop that expenditure from getting skipped. So we're getting information, we're doing it by process because it's easier and makes sense that way. We're going to do all the same things together, and we're going to keep track of it so that this information is all these qualities, right? Relevant, reliable, complete, timely, understandable, verifiable, and accessible. So we're going to learn the risks to those qualities of information. And when we learn it, we'll learn it by process. So we will start talking about the revenue process. Okay, what's the risk to revenue process? Right? What would make information be not timely in revenue process? Well, maybe the salespeople don't send in their sales records. Okay, well, how do we make sure they do that? Well, they don't get their commission till they send it in. Okay, right? So you can see we're going to have risks, we're going to have rules, and the system is what takes care of that. The system incorporates the rules. A system can be manual or computerized. So when we start looking at systems and learning about systems, typically most of us think about, a system as being on a computer, but really a system is just a system. It's a methodology. It's a way of doing things. So if we have a system for doing sales, that's our system for doing sales. It just so happens to be using the technology of a computer. When we do the SUA, we're going to use the technology of a paper journal, which is how it used to be done for centuries. All right, so manual or computerized. People use the system. There's processes, there's technology, and there's control. So this is a system. It's the collection of the people, the processes, the technology, and the controls that handle the accounting. So transactional data is collected, it's stored, it's made meaningful, and the information then has the qualities we want. AIS adds value because it makes it more efficient and effective, right? You can imagine if I'm a store manager and I need to know, gee, do I need to go purchase some more stock for the stock room, or do we have enough stock? Well, if I can look on my computer and say, oh, well, we're getting low on item number 3, but we have plenty of item number 4, I'll order some number 3, right? But if I have to go to the stock room and count everything every time I want to know, that's not very effective and efficient. So these systems, by helping us keep track of the revenues, of the expenses, of the inventory, of the payroll, it makes it easier to make our decisions and reduces costs. AIS is influenced by strategy, so different organizations have different ways they make money, right? They have different strategies. So if I'm Walmart and I'm the everyday low-cost provider, I need my information systems to really help me with the logistics, to really help me find the cheapest vendor for everything, and my information system is going to be set up for that. If I'm Tiffany's and I want to buy only the best diamonds in the world, my information system is going to be set up very differently, right? If my strategy is to expand globally, my information system is going to be set up to accommodate all the different accounting and taxes and all the different rules and regulations that go into operating internationally. Whereas if I just operate in Kingsville, Texas, well, I don't need to worry so much about what kind of taxes are happening in the European Union, right? So strategy is going to affect what we do in our information system and what we're measuring. Same thing, I'm not going to really talk too much about the value chain, but I think you need to get the idea that throughout the organization, there are activities that add value to what the organization does to make profits, right? So if you're well, let's go back to HEB. If you're HEB, you purchase inventory and then you turn around and sell that, right? And maybe you have some production. You know, certainly you can go in at HEB and you can see people making food, so they may have some production type facilities. We know that they have HEB brands, right? Hill Country Fair. So maybe they make some of their own, or they probably just contract that out, but they may make some stuff themselves. All right, so primary activities add value, and support activities allow primary activities to be efficient and effective. So your information system has to take into consideration our value chain, right? How are we receiving and storing materials? How are we manufacturing or repackaging? How do we distribute stuff? How do we market and sell? How do we take care of services? Clearly, your information system has to take this into account as well. These are all part of the business process. We segregate this out as and call it value chain. All right, so that's it. I told you it wouldn't be too long. The main point being, you are going to learn how to take these individual accounting rules and transactions that you've been learning all along in intermediate and intro and all these classes, and you're going to be able to compile a bunch of them into useful information, whether that be an invoice to send to the customer, whether that be a purchase order to send to a vendor, whether that be financial statements. Typically, in most of your classes so far, you've probably really only been thinking about the financial statements. So we're going to expand your idea of what information accountants provide is, and we're going to focus on a more practical side, which is, yes, okay, I know that revenues are credits. I know when I make a sale, I need to post that to the journal. But how do we actually physically do that in the real world and incorporate these rules that we call controls to make sure the information that comes out has the qualities we want? So that's it for today. What I'd like you to do between now and class on Monday is read Chapter 2. We're going to move on to transaction processing and ERPs. So read chapter 2 before Monday, January 25th. You might want to look at your textbook. We don't have a quiz until Wednesday. So on Wednesday we'll have well, it's not due till Wednesday, it's an online quiz. But to prepare for that quiz, which will be over chapter 1 and 2, I would suggest look through at the back of your textbook. There's multiple choice questions. And at the very back are the answers to those questions. So if you want to see if you're kind of getting the point of the chapter, try those multiple choice questions and see how you do. And of course there are also practice quizzes out here, right? So out here where it says old quizzes, so go out to the old quizzes and practice that quiz, chapter 1 and 2, and the questions from the back of the chapter 1 and 2, and you should be able to prepare yourself for the quiz pretty well, which we'll take online. I'll talk about it more Friday. I'll talk about it more on Monday, just to remind you. All right, so good luck. I think we're going to have a great time and learn a lot about turning accounting data into information using a system. Have a great weekend.